Monday Mondays with Chad Eddie.
Episode 4, Investing, Making Your Money Work for You. Welcome back to Money Mondays. I'm Chad, and today we're diving into one of the most important financial topics, investing. If inflation is a silent thief taking away the value of your savings, investing is your best defense and a path to growing your wealth over time. So last week, we talked about inflation and how it eats into your money's purchasing power. If you haven't seen that episode yet, check it out. The link is in the description. But this week, we're talking about how to combat that and build wealth. Investing is simply putting your money to work to generate more money. Think of it as planting a seed. You give it time and care, and eventually it grows into something much bigger. Did you know that investing has roots as far back as ancient Mesopotamia? Farmers would lend surplus grain to their neighbors, expecting to be paid back with interest in the form of more grain or livestock. And it was a way to grow wealth and create security for the future. Proof that even in 3000 BC, people understood that money, or in this case resources, could grow. You're trading short-term comfort, spending your money today for long-term growth and security. Whether it's stocks, real estate, mutual funds, or bonds, investments are tools to beat inflation and to grow your wealth. And what does investing mean to you? Is it something that you've thought about, or are you just starting to explore? Drop your answers in the comments below. Now, we've already seen that saving money alone doesn't cut it, because inflation erodes the value of your cash. A savings account might earn 1% interest while inflation rises by 3 to 5% annually. That's just a losing battle. Imagine you have $1,000 in savings. Over 20 years, inflation will cut that value almost in half unless you invest it wisely. But if you invest and earn, say, 7% annually, that $1,000 could grow to nearly $4,000. And that's the power of compounding, earning returns on both your money and on the returns it generates. In ancient Rome, citizens often invested in shipping ventures. They pooled their resources together to fund expeditions, and when the ships returned loaded with goods, the investors reaped large profits. But here's the catch: the Romans understood risk. They spread their investments across multiple ships to ensure their wealth didn't sink if a single ship did. That's a lesson in diversification that we still follow today. There are so many ways to invest. Let's break it down. So stocks are owning a piece of a company. It's high risk, but potentially high reward. Bonds are lending money to governments or companies for a steady return. Lower risk, lower reward. Real estate is buying property to rent out or to sell for profit. And mutual funds and EFTs is pooling your money with others for diversified investments, much like those Roman ships. And let's not forget tax advantage accounts like TFSAs and RRSPs, which help Canadians save on taxes while investing. Now here's a quick tip. Start small. You don't need thousands to invest. With platforms today, you can begin for as little as $10. Ask me, I'll show you how. Here's the secret. The earlier you start, the better. Compound interest means that your money grows on itself over time. And even small contributions can lead to huge results if you give it time. Here's something that many people overlook. Life insurance is also a type of investment. Whether you're looking at term insurance, whole life, or universal life, these policies can provide security and even growth over time. So even if you're paying for term life insurance, it's an investment in your family's future. For example, you pay $200 a month, which equals $2,400 a year. And if something happens to you this year, God forbid, that $2,400 investment could provide your family with a $300,000 to $500,000 payout. And that's a return you can't get from any other form of investing. Universal life insurance takes it a step further. A portion of your premium is invested in a tax-sheltered account and it grows over time. And not only does it provide a death benefit, but it can also build cash value if you can use while you're still alive. Think of it as planting a tree. The death benefit is like a strong trunk supporting your family, while the growing cash value is like branches you can use for shade or funds along the way. Now, when I was young, I heard the phrase, money doesn't grow on trees. But here's the truth, it actually does if you invest it. Every dollar you invest is like a seed. It takes time, sunlight, and care, but it will grow into something much bigger. Don't let your money sit idle in a savings account or get consumed by inflation. Put it to work. So here's your action plan. 1, start small, but start today. Invest in something, even if it's just $10. 2, look into life insurance as part of your investment strategy. 3, drop your investing questions in the comments below or message me on Instagram. I'd love to help. Make sure to subscribe to my YouTube channel for more episodes of Money Mondays and follow me on Instagram and Facebook. Don't forget to grab my free ebook, Automatic Budgeting for Canadians, through the link tree in my bio. Next week, I'll be talking about creating multiple streams of income to supercharge your financial freedom. You won't want to miss it.